Hi y'all, Cam Walker here, Texas agent. I have my friend Shauna with me today. She is a senior loan officer and we're going to talk a little bit about pre-qualifying, pre-approval, the process that's needed. As most of y'all know, it's a crazy market right now, and most MLS listings with the instructions from the agent are saying submit your offer with a pre-approval letter or submit your offer with proof of funds. So I thought I'd bring Shauna on, kind of talk about the process. Give me a little background on you. How long have you been doing?
I've been doing lending for about 2 years, and so love doing my job, love helping clients and walking them through the process and getting them into new homes.
She's working with some of mine right now and she's been fabulous. So I'm a new client. I just got your name and number from Cam and Curtis and I'm calling you. Walk me through the process of what it takes to get pre-qualified and what you're looking for.
So when we start the process, basically what we do is we do an application. And so I get your information, name, phone number, social security number, your date of birth. I need those to be able to run your credit. To get pre-qualified, we take it's your verbal information. So I take what you tell me you make monthly, what your credit score is after I run your credit, and we come up with a number that suits you for a house. And so I always like to get what your comfortable monthly payment is and not what your top budget is for that house that you qualify for. And so a little bit of the difference between me and, like major banks and stuff is with the pre-qualification letter, I actually ask for some of your documents up front so that I can verify information. And when I give you that pre-qualification letter, we know that you're going to be good for it and not come back later and have a surprise and you don't qualify anymore. So that's a little bit about the pre-qualification.
So what kind of information? I know you need social security numbers because you're going to run credit. Of course, that's a big part of it. We also look at debt to income.
We look at debt to income, and that's once we pull your credit, we'll pull in all your liabilities. And so then we'll calculate your debt to income with what you state your monthly income is and what your monthly payments are for all your liabilities. So a lot of people get confused and they think it's the whole amount that they owe on an object as far as a boat or a car or whatever. It's actually just your monthly payments and your monthly income.
Of course. Now there's pre-qualifying and there's pre-approval.
Yes.
What's the difference?
So pre-qualification is basically just all your verbal information. It is you telling me that your monthly income is $10,000 a month and that your credit score is 800, and so then we just plug that in and we say, okay, you can qualify for this amount. It's not verifying any documents. It's not real numbers. It doesn't give you an accurate approval. And so when we go to a pre-approval and not a pre-qualification, we've actually collected documents from you. We've collected 2 years of tax returns, 30 days of pay stubs, 60 days of bank statements, and your W-2s. And so we actually verify your information. We verify that what you stated you had and made actually reflects on your documentation. And then we actually go ahead and run the desktop underwriter, which is a program that we send, once we put in all the information, we send it through the program, and it actually if there's any red flags, it'll catch it and say, hey, go check this out. And so a pre-approval is we've run it through that desktop underwriter and you have an approved eligible and you are able to go out and buy.
So from the time I make the phone call to you, what is an average timeline? Is it, I know it depends on me getting you the documents because that's a big part of it. I could just tell you verbally, of course, and you would get it quicker, but to get the pre-approval, typical average timeline from once you have all the documents.
So typically what I do is when we initially run that credit, see where your credit score is, see what your liabilities are, and then I call you back and we have a conversation about everything and I send you a documents checklist. Typically I ask you to get me those documents in 24 hours. So from the time you start the application to your pre-approval is about 24 to 48 hours depending on when you get those documents over to me.
Okay, so I know credit is just a small piece of this process, but what is the credit score that you're hoping to see that makes it? I know there's lots of different programs and everything is different, but what's that credit score that we should be hoping for?
So our minimum credit score is 620, but the higher your credit score is, the better your interest rates are going to be. And so There are different programs that require different credit scores. For instance, if you're doing a down payment assistance program, that would require a minimum of 640. Now, when we have those minimum credit scores, it's not a guarantee that your loan is gonna, be approved and get through, because it depends on what's on your credit. If you have derogatory marks, if you have things in collections, that low credit score and those things in your collections or derogatory marks, late payments and stuff, is a red flag to the underwriters, to the investors, that, well, hang on, their credit score is low and they have these marks. So we look at your credit worthiness.
So there's a whole big picture.
It's a big picture. It's not just like, we can't really just narrow it down to one little thing. It's a big picture that we look at.
So I come to you, my credit's only a 585. Are there any things I can do? Do you help give advice? Are you allowed to give advice? I don't know how it all works as far as how can I get my credit score up? What are things I can do?
Absolutely. So if you come to me, and I think, let me back up a little bit. A lot of what people do is they'll come to me and they'll say, hey, Credit Karma says my credit score is 650. That's great. But when we look at that, mortgage takes a different scoring. And so when you see 650 on Credit Karma, when we pull, it's typically about 20 to 25 points lower. And it can be up to 40 points lower sometimes. It just depends. And so if you come to me and we pull and I say, hey, you know what, your credit really is 590 or 580. I go back and I look and see what, why is it that way? Mm-hmm. And we come up with, we see if there's room for improvement. When we pull credit, it'll tell us if there's room for improvement, and we'll see where we can improve your credit. And we'll see, we'll try and do it with the least amount of money, and we'll come up with, a game plan and a timeline. And so as long as you follow that game plan and that timeline, we can get your credit up to where we need it to be. Sometimes it takes just 1 month. Sometimes it takes 6 months or a year, but we can work on it.
That's good to know. So I get my pre-approval letter. I've got it. I'm putting the offer in the house. Is there a expiration date on it? Could it totally change the next day if I decide to, go buy a new car?
Absolutely.
How valid is it and for how long?
So the pre-qualification is valid for 60 days, and then we reevaluate. And each house that you're going to put an offer on, I will write a new pre-qualification letter for you, so that if you're offering, $150,000 on the house, but you really qualify for 190, then we don't want to go that high on your pre-qualification letter. We want to put the 150, and so that you have room to negotiate. Then when we go through the process, we ask that when we start this process, you don't go out and buy new cars, don't go buy new furniture, don't go finance, anything, open new credit cards, because we have actually already pulled your credit and qualified you for where you're at right now. So those are some of the things that we go over, and I talk to the clients about is don't, keep your lines of credit open, make sure you're paying your credit cards on time, keep your balances down on your credit cards, don't miss payments, cars, mortgage, of that nature. And like I just said, no new cars, no financing furniture, no opening credit cards, anything that's going to pull your credit. If for some reason you need to do something and you're questioning it, call us and ask, or call me and ask, and I will definitely walk you through and help you out. And to that nature, don't move large sums of money that aren't traceable. So
paper trail.
Yeah, you need a paper trail for everything. And mom decides she wants to give you, $9,000. Wouldn't that be nice? No, mom decides she wants to give you $9,000, and it just pops up in your bank account. Well, when we look at it, we're gonna have to see that paper trail, and so then we're gonna have to ask mom for her bank statement.
Where did it come
from?
And
where did it come from, so we can see it coming out and coming in. And so, just safeguards.
And I know work history is very important. A lot of it depends on, as we've talked before, which loan program you're going to go with. And I'm hoping you'll come back and we can talk about, what's the difference between FHA and conventional and VA, and we'll get into more of the loans.
Absolutely.
But as a general rule of thumb, how long should you be in a job? What kind of work history should you show?
So we require a 2-year work history. We look at a 2-year work history. We understand that things happen and there are gaps in your employment. And so typically the rule of thumb is for every month you're out of work, you need to be back in work for a month. Speaking of the loan programs, with conventional, you want 30 days of work history. We can go 30 days of work history. And then with FHA, depending on, like I said, depending on how many months you're out of work, depends on how many months you need to be back in work.
Perfect. All right, so we've covered a lot. Anything I'm missing, because this is your wheelhouse, it's not mine. I'm just going to send people to you. So anything else you'd want a client to know before they call you, or any words of wisdom to throw out
Words
there?
of wisdom. I think that just be prepared to. It's a process. It's not just cut and dry. It's just a process, and your ability to work with us and help us out makes things run more smoothly. And so, just hitting those. We have timelines and deadlines and stuff that we have to hit, and I walk you through it each step of the way. And when there are things that we need, we just ask that you do it in a timely manner so that we can close on time and fund on time.
Perfect. Well, I know you've been awesome with the clients I've sent to you. I know you've talked to them on a Saturday and a Sunday, and you've answered my questions. So Shauna is a great resource. Hopefully we'll get her back on here really soon, and we're going to talk about, like I said, all the different loan programs. Hopefully you've gotten some good information out of this, and we'll see you next time.